Is value trying to take the leadership here again?
Well, we like what we see in small caps. You know, the small caps are heavily weighted in financials and industrials and things that do well in the early stages of an economic cycle. So we think if you do believe that we're in the early stages of an economic cycle, this is the time to own small caps. And to your earlier point, the fact that we had seen outflows through much of July and August and small caps still kind of traded sideways is actually kind of a positive contrarian indicator that small caps could be timely, that the underlying valuations are still pretty attractive. We also see M&A being pretty healthy out there in the market, which is good for small cap valuations.
But I guess the real question for investors of all stripes who choose to kind of, pick versus just going with something like the S&P 500 is, are we going to go back to a Q1 type of trade? Financials up, energy up, Russell 2000's up, or are we going to continue what we started to see just as that trade stopped working, then growth really started to pick up over the summer in tech and the NASDAQ 100, like we said, that really led the way. So I guess the question is, are we going back to the future here? Russell's outperforming, maybe banks, maybe energy, who knows? Or could we see sort of a new leadership pattern emerge? Or do you not care about any of that? You just think the Russells themselves can do well?
Well, I think you want to really be focused on individual company fundamentals. And I think what you see going on in the market, those rotations that you're talking about, are actually pretty healthy. And they're typically what you see in the early stages of a healthy bull market, where capital is rotating from sector to sector based on underlying fundamentals. So we're very company specific here at the Hodges Funds.
Let's get company specific because I see that the Russell 2000 is up 17% so far this year. Your fund up 35%, according to my notes, though a little flattish over the last quarter. What are the stocks that have taken you there to that 35% gain, doubling the Russell 2000?
Well, it's really been a broad array of both, industrial stocks, consumer stocks. A lot of the things that were kind of beaten down and forgot about last year have done well for us this year. And we still see opportunities out there right now.
71% gain over the past year. Let me get you a little more specific here. I know that sometimes portfolio managers are hesitant to say what's powering their portfolios, but what are your three largest holdings right now?
They would be Commercial Metals would be one, which is one of the largest rebar manufacturers in the U.S. It only trades about 10 times earnings. We see them as being a major beneficiary of much needed infrastructure spending out there. And then we like companies like some of the semiconductor stocks. We have a pretty good position in Silicon Motion, which is a manufacturer of memory control chips that stock's up big this year, but we still like it. It's growing double digits and it only trades about 11 times forward earnings. And then one more I'd mention would be Academy Sports and Outdoors. This is a sporting goods retailer that saw a big windfall last year from the pandemic, but they used that windfall to really pay down the debt on their balance sheet, which we like. They now have opportunities to grow their store base, and it also only trades at 10 times forward earnings.